Hey everyone, and welcome back. It's Christian Gonzalez here with Lexington, and today we're diving into an essential part of running a successful company, right? Preparing your business for the worst. Because here's the truth, right? No matter how strong you guys are on paper, no matter how streamlined everything's running on a cash flow basis, you have to make sure that you are prepared for unforeseen circumstances, right? As far as equipment failures, even new regulations that require immediate spending, right? Because businesses that survive aren't the ones that avoid surprises. They're the ones that prepare for them. Unexpected expenses can cripple cash flow. If you're not ready, you risk running into unforeseen circumstances, right? Issues with payroll, issues with your vendors, and things of that nature. When it comes down to that, you need to be prepared, right? These surprises become manageable bumps in the road as for when you're unprepared during your daily operations, right? Preparation builds resilience, positions your business in a crisis-ready form. The first strategy is simple, but often overlooked. Keep aside an emergency reserve. A general rule of thumb, keep 3 to 6 months of essential expenses in liquid savings, right? For seasonal businesses, make sure that you have a cushion during your slower months. And this funds as a shock absorber for when you guys don't have to dip into your own operational expenses or scramble around looking for the best solution and ending up coming across the worst rates. If your business relies too heavily on one product, one service, one client, a single disruption can be devastating. Ask yourself this: can we add a complementary service? Is there a secondary market we can reach? Could we build recurring revenue, passive income, like maybe subscriptions or maintenance contracts or things of that nature, right? Diversification doesn't just grow revenue, it stabilizes it. That way you guys aren't running and scrambling for when those problems arise. Insurance may not be the most exciting topic, but it's vital for your safety of your business, right? Make sure that your policies cover property damage and equipment breakdowns, business interruptions, liability claims, even cybersecurity risks, right? The right coverage ensures that when things come falling down, your business doesn't come falling down as well, right? And make sure that you can still operate successfully, knowing that that's going to be handled with the right insurance policy. And cash flow is the lifeblood of your business, and small leaks can become big problems. Track receivables closely and follow up on late payments, right? Negotiate your payment terms with vendors when possible, and use financial tools to forecast your cash flow over those 30, 60, 90-day net periods, right? When you have visibility, you can anticipate shortfalls and act before they become emergencies. Instead, build relationships with lenders and explore financing options very, very early on, right? Whether it's a line of credit, whether it's a term loan, SBA loans, equipment financing, right? Having pre-approved terms and understanding what you're approved for before things become out of hand is always in your benefit. It's always best to be over-prepared rather than under-prepared in any way, shape, or form. And think ahead, right? Encourage departments to set their own mini reserves or contingency plans. When the whole organization is focused on resilience is when you guys are operating within your best form. Unexpected expenses are inevitable, right? But financial chaos doesn't have to be. By building an emergency fund, diversifying your income, reviewing insurance, monitoring your cash flow, all of these help you turn the unpredictable into moments that can be manageable, right? And if you need a partner along by your side, we're right here for you. Lexington Capital Holdings. Be sure to make sure you like and comment and subscribe underneath, and I'll see you guys there next week for the next funding topic.